my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your weekly technical analysis of LME 3-month lead and tin. I'll start with LME 3-month lead, and it's by far the longest piece of commentary I'll be doing in this video. So, yet again, and I know I repeat it each time, but it's nice to see on this daily chart the market still keeping within the May to October 2020 bullish shift pitchfork. Once again, the key features from last week have been manyfold. To start with, the base of the action last 2 weeks was a combination of the middle time, currently at 21.38, and a 50% Fibonacci line of the big February 2018 to March 2020 move at 21.27. The move up started defibrillating, for want of a better word, during the middle of last week. Prices became indecisive, alternatively bearish, then bullish, then bearish again, culminating in Friday 2 weeks ago, counter to the counter key reversal down. There was also an indecisive spinning top. That led to Monday and Tuesday last week's fall, but again only really to the middle time once again, on a closing basis that is. Indeed, Tuesday last week was a bullish thrusting pattern that saw a move back up, also started being indecisive as recently as only yesterday. This was in part due to the market reaching a new May-based downtrend currently at 22.15, but in part also testing once again the 50% Fibonacci line overhead of the June to October 2018 move at 22.21, and this is where we are today. All this helps in defining which pattern to take and which to discard. From the recent library of patterns accumulating here, you may recall I mentioned 4 weeks ago that I quote, "There are other patterns developing, I suspect, with the action since February, but they are too early just yet. Maybe next time." End of quote. It is still too early, but I've whittled down 3 possible patterns I had last time down to 2. They are both bullish. The first is the one I had last time, a cup with handle pattern. The second is a bullish halfway hesitation, and the one I have discarded is a bullish scalp pattern. Let's look at these 2 that I've left, their merits and opportunities. The action over late February to date looks promising as a bullish cup with handle pattern. The only issue is the excessive height over the last few weeks. It would have been preferable to have kept a height in the 21.85 area, but never mind. If the market should break higher through the previous high and especially the upper time, currently at 22.95, then we may have a target X in the 23.51 area. Now the second pattern is a bullish halfway hesitation. This would see one leg already created and the action since the 10th of May being the hesitation. The question is, where do you measure the first leg from? Now, I would suggest 2 possible points. The late April dip down to 2000 or the late March low in the 1915 area. The first would be a move of about $260. The second would be a move of about $345. I'm not sure of either as yet, but that would be the size of it should it happen. Of course, you cannot measure the move higher until you have a confirmed move higher. For this, I would say clear and consecutive closes over the 50% Fibonacci line at 22.21. I have to stress, it is still early yet, and there are a lot of obstacles in the way higher. That is what I can see right now. One final point. We've had a golden cross of the short medium moving average, currently 20.71, over the medium moving average, currently 20.63 during the middle of last week. It's a lagging indicator, but it's seen as a bullish indicator as well. LME 3-month tin. The move back up, which started some 12 weeks ago, translated to a higher level some 5 weeks ago. In between the middle time below, currently at 29.345, and the upper time above, currently 31.725, of the January to March bullish shift pitchfork. This ties in nicely with a point I made 3 weeks ago. It is an overtly bullish one, and as I said at the time, and I quote, "and a little bit out there," end of quote. So if we look at the November 2020 to late February 2021 action as one leg of a possible type of bullish halfway hesitation, as I said, it is well out there at the time. Anyway, if that were to be the case, then we could be looking topside at a possible target in the 31,250 area. Now, when I floated this idea 3 weeks ago, I said it was a little bit out there, but I still drew a target X for it anyway. Currently though, we are only $215 from reaching it. Right now, the market is in fairly free territory overhead, at least until the upper time. We only really start hitting overhead congestion from about 32,100. And today is actually being a little obtuse, looking like an outside day at the moment, despite also being a new high, one not seen since May 2011. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.